India is emerging as a crucial hub for data centers but remains underpenetrated compared to global standards. Despite contributing to 20% of global data generation, India accounts for only 3% of global data center capacity. The stark contrast is evident when comparing capacity per million internet users. India stands at 1 megawatt, while China boasts 4 megawatts, the EU has 12 megawatts, and the USA leads with 51 megawatts. This capacity gap is significant, given India's substantial mobile data consumption of 26 exabytes per month. As internet penetration remains lower than peers, the need for infrastructure expansion becomes critical. Investments in data centers are projected to surge, driven by advancements in networks like Reliance Jio and digital payment infrastructure. Capacity, which grew from 122 megawatts in 2010 to 877 megawatts in 2023, is expected to reach 2,000 megawatts by 2026, with 50,000 crore rupees investments in the pipeline. India's data center sector is on the rise due to several key factors. First, digital transformation across e-commerce, fintech, and the adoption of 5G is projected to boost internet penetration to 87% by FY 2029, further increasing demand. Cost advantages also make India attractive. Data centers benefit from a 45% lower capital expenditure compared to global norms, thanks to affordable land and labor. Furthermore, government policies play a pivotal role in fostering growth. By granting infrastructure status to data centers, the government has enabled easier credit access and long-term financing. These incentives, combined with a favorable business environment, are spurring development. As more international and domestic players invest in India's digital landscape, the outlook is positive. With strategic partnerships, expanding tech infrastructure, and increased consumption, India's data center ecosystem is primed for exponential growth. Anant Raj has shifted focus towards developing commercial properties for data centers, capitalizing on India's digital infrastructure boom. Over the past 5 years, compounded sales growth has been an impressive 34%, while profit growth soared to 45%. However, consistency remains a concern, as profit margins and returns on equity have fluctuated. The company's operating profit margin improved recently, reaching 23% in March 2024. Additionally, Anant Raj's stock delivered a robust 110% CAGR over the last 5 years. While growth metrics are promising, investors must evaluate how sustainable these figures are amid rising competition and evolving market conditions. Adani Enterprises is leveraging the Adani joint venture to expand its data center footprint through strategic space leasing and services. Over the past 5 years, the company's compounded sales growth stands at 19%, while profit growth has surged to an impressive 43%. Despite these solid figures, consistency is mixed. Operating profit margins have shown a gradual improvement, rising to 14% in the latest period. Furthermore, the stock has delivered a remarkable 69% CAGR over the past decade. Investors should carefully consider these metrics and the strategic potential of Adani as part of their analysis. Reliance Industries is advancing in the digital infrastructure arena by developing data centers through the Digital Connection joint venture, with an initial focus on Chennai. Over the past 5 years, the company has delivered a compounded sales growth of 10% and a profit growth of 12%. Despite steady growth, consistency is an area to watch, with operating profit margins oscillating between 15% and 18%. Meanwhile, the stock's 5-year CAGR is 15%, reflecting moderate returns. Reliance's strategic moves in data centers could be pivotal for future expansion, and investors should keep an eye on profitability trends. Techno Electric and Engineering is investing $1 billion in data center projects, capitalizing on its strong engineering, procurement, and construction (EPC) capabilities. Over the past 5 years, the company has seen moderate compounded sales growth of 9% and profit growth of 7%, which suggests a relatively slow expansion pace. Operating profit margins have fluctuated but currently sit at 15%, reflecting some stability. The stock's impressive 5-year CAGR of 44% indicates high investor interest, driven by the potential of its data center ventures. As the company navigates this ambitious shift, maintaining higher growth will be essential for sustained market confidence. Bharti Airtel is aggressively expanding its data center business through NXTRA, aiming to triple capacity by 2025. Over the past 5 years, the company has recorded a 13% compounded sales growth, alongside an impressive 122% profit growth, showcasing significant financial improvement. Operating profit margins have steadily increased, now sitting at 52%, highlighting strong operational efficiency. However, net profit figures have experienced volatility, reflecting challenges in sustaining consistent earnings growth. With a 5-year stock CAGR of 12%, Bharti Airtel's strategic focus on data centers could drive future growth, though investors should consider its historical profit fluctuations. Exide Industries is capitalizing on rising demand for high-end batteries and UPS systems. Over the past 5 years, the company has achieved modest sales growth of 3% and profit growth of just 2%, indicating challenges in maintaining strong expansion. Operating profit margins have hovered around 11%, reflecting a stable yet unremarkable performance. On a positive note, Exide's stock has delivered a strong 18% CAGR over the past 5 years, with recent momentum pushing it to 63% in the past year. As Exide continues to adapt to the evolving energy landscape, growth acceleration will be crucial for sustained investor confidence. Kirloskar Oil Engines is a leading provider of generators that ensure uninterrupted power supply, a critical need across various sectors. Over the past 5 years, the company has demonstrated a steady compounded sales growth of 10% and profit growth of 19%, showing reliable financial performance. Operating profit margins have improved to 18%, reflecting efficient cost management. The stock has delivered an exceptional 5-year CAGR of 47%, with recent gains highlighting strong market interest. As demand for dependable power solutions increases, Kirloskar Oil Engines is well positioned to continue its upward trajectory, offering both stability and growth opportunities. Sterlite Technologies supplies essential optical fiber solutions for data transmission, but recent performance has faced challenges. The past 5 years show negligible sales growth of 1%, with compounded profit growth sharply declining by 186%, reflecting significant financial struggles. Operating profit margins have also weakened, currently at a mere 7%. The stock price CAGR over 3 years is down 22%, highlighting investor concerns. As the industry evolves, Sterlite must overcome these hurdles to regain investor confidence and stabilize its financial trajectory. The company's turnaround efforts will be crucial to maintain relevance in the competitive data transmission market. Blue Star specializes in advanced cooling solutions, increasingly essential for data centers. Over the past 5 years, the company has delivered a solid 13% compounded sales growth and a robust 17% profit growth, demonstrating strong and consistent expansion. Operating profit margins have gradually improved, stabilizing at 7%, a promising sign of operational efficiency. The stock's 5-year CAGR stands impressively at 35%, underlining investor confidence. With a focus on innovation and scaling its cooling solutions for critical infrastructure, Blue Star is well positioned to capitalize on the data center industry's growth while sustaining its upward financial trajectory. Black Box is at the forefront of digital infrastructure development, with a strong focus on data center innovation. Over the last 5 years, the company has achieved impressive sales growth of 28%, but profit growth of 76% highlights volatility rather than consistent improvement. Operating profit margins have gradually increased, reaching 7% in the latest fiscal year. The stock has seen an extraordinary 85% CAGR over 5 years, reflecting market enthusiasm. However, with fluctuating profit margins and uneven financial performance, investors should consider both the potential upside and risks associated with the company's ambitious growth strategy. Mindspace Business Parks REIT focuses on leasing high-value commercial spaces to data center operators, tapping into growing digital infrastructure needs. Over the past 5 years, the company has achieved moderate compounded sales growth of 11% and a profit growth of just 3%, reflecting stable but unremarkable expansion. Operating profit margins remain strong at over 70%, showcasing efficient operations. However, the stock's performance has been mixed, with a one-year CAGR of 20%. As data center demand continues to rise, sustaining higher growth rates will be crucial for attracting and retaining investor interest. If you'd like a detailed technical analysis of any of these stocks, comment yes below.